Ray Dalio's Bridgewater Associates reducing short positions in several European companies last week, including Total, SocGen and Daimler. But the shorts that remain go against the tide. Eurozone funds have seen net inflows in the months since Bridgewater began its short. Joining us now from London is Gina Martin-Adams, Bloomberg Intelligence Chief Equity Strategist. Gina, get me up to speed. You've been in London, I assume, about 24 hours on the view over in Europe versus the view here in the United States.
Yeah, so I think that there's one argument that constantly favors Europe, and that's a valuation argument. We heard the same thing at the beginning of last year that we're hearing at the beginning of this year, and that is European shares are relatively discounted in comparison to the other big developed market in the developed indices of the U.S. And, you know, what we find when we do our research is that this valuation argument has some pretty big flaws. I mean, I think for European stocks to outperform on valuation alone, you are highly sensitive to energy stocks specifically outperforming. So you really need to see oil prices recover and maybe even the euro start to depreciate relative to the dollar in order for this trade to work. I think there's still a lot of folks that want to point to financials as well as an area where they see opportunity in Europe relative to that of the United States, and there is indeed still a discount there. But on this front, I think you want to watch the regulatory bodies. I mean, Jerome Powell speaks this week for the first time as the new Fed chair. We happen to think that what he's going to say is highly sensitive to the regulatory arm of Fed policy, likely showing some decreased regulation for the first time in a very, very long time, which would generally benefit U.S. financials over European shares. So we're really digging in a little bit to the valuation argument over here, speaking with a lot of European investors and kind of trying to find the devils in the details.